So we have had this kind of stair step lower. Remember last week we were up at 70 realized, we kind of stair step to mid 60s, and now we're down to kind of 50, 52, 53 on 1 week realized. On Bitcoin, similar story on Ethereum, stair stepping from 85 to 70 and back now into the mid 50s. So the realized vols kind of converging across the two assets. Implied vol started up at 60, ended the week at kind of 50. So 10 vol drop there in the front end. Ethereum kind of started at 75, finished there at 60 odd. So a 15 vol point drop in Ethereum. Another way you can see that. So in terms of carry, we've still got very slight negative carry in Bitcoin, as realized is higher than implied, but you've actually had realized really overshoot to the downside, whilst Ethereum implies are still holding a little bit higher at 60. So we've got positive carry back in Ethereum. Looking at the term structure, you can see where it was a week ago, and you've seen the front end really collapse. But that middle part of the curve in November, you see that big kink in November, that's holding because that vol doesn't want to go anywhere for the elections. So really, it's been a collapse of the front end has been the story. So you can see we're starting to see a bit of a right angle in the curve now where November's holding that premium. And that premium is translating through to Ethereum as well. If you look at October Ethereum right now, it's at like 64. November's at around 70. So about 6 vols there. And if you look at October Bitcoin, it's at 53.5 versus 60. So similar sort of story, similar sort of steepness. So the US election is being considered to be a potential big vol event for crypto, and that's translated through to both Bitcoin and the Ethereum term structure. All right. Now looking at the kind of time series of vol, you can see what happened here. Front end really got hammered into the weekend. This is pretty cyclical that we see that quite regularly in crypto, and then it bounces after the weekend. We got as low as 45 vol on the 1 week. Ethereum got hammered as well, but all of these short ends bouncing a bit, but we are still seeing a contango in the curve. So that's kind of the path that it took. Obviously, after CPI, it really started to accelerate lower as those gamma sellers came out in force. Looking at Skew, we did start the week with a 1 week put skew of about 6 vols, call skew of about 5 or 6 vols on the 1 year. So quite a steep curve going from put skew in the short end to call skew in the back end. As the week evolved, we have seen the 1 week dramatically reprice into actual call premium. So right now we've got a 1 week call premium of 3 vols. We've got 1 month and 2 month kind of closer to neutral. And then we've got call skew coming back in the longer dates, 5, 7 vols, etc. So we've had this little flip in the front end. It hasn't translated to the whole curve. So that 1 to 2 month bucket is still slightly for puts or more neutral. But really that 1 week skew, people like lifting some calls for Jackson Hole, thinking it might be worth a catch-up trade because crypto hasn't participated. So if Jackson Hole is taken positively from a macro perspective, maybe that gives the green light for crypto to have a bit of a catch-up rally. So it looks like that's what's coming in terms of the flow. Ethereum, though, still holding a put skew, about 4 vols in the front end, but it does translate to a call skew in the back still, 5, maybe even 7 vols in that 6 month to 1 year bucket. So no change in long-term skew, which is very similar to Bitcoin, but certainly the short-term skews are diverging. We can also see that in the relative value side of things. So here, where are you? That did not work at all. Okay. I'm gonna share it on just to speed up the process. I'm gonna share it on the PDF. Here we go. So you see this skew divergence here, just on this chart as well, where it's kind of short end skew was kind of tracking in line a week ago, and it started to diverge from the middle of last week, where Ethereum skew kind of held on to a bit of put premium, but Bitcoin really started to accelerate towards neutral and then flipped into calls. So you can see that clearly there between the green and the red line diverging. You've got the term structure of the spread. Last week, it was very much inverted with a 15 vol premium for ETH vol, moving to about 10 vols in the back. Now the entire curve has collapsed. We see it sitting around 10 vols flat from kind of end of August, but these short-term expiries for the next week or so are even more neutral looking at something like 8 vols for Ethereum. So that front end giving up its premium, and basically because the realized vol is converging, it's kind of saying, well, we don't need to have this 15 vol premium anymore on ETH. And we think kind of a 10 vol premium across the curve is a bit more fair. And that's what we're seeing across the curve.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.